Welcome to today's market report. European stock markets are seen opening lower on Friday, consolidating after the substantial post-election bounce as the wait for the identity for the next US president continues. The DAX futures traded 0.4% lower, CAC 40 futures dropped 0.6%, FTSE futures fell 0.3%. European stock markets closed higher on Thursday, rising for a fifth day, their longest advance since April. The DAX gained 2% and CAC 40 ended up 1.2% higher. FTSE 100 rose 0.4%, lifted by the post-election rally in the US and by fresh monetary stimulus from the Bank of England. While the name of the next occupant of the White House is still undecided, Democrat Joe Biden has strengthened his hold on the presidential race, steadily chipping away at incumbent President Donald Trump's early lead in a pair of crucial swing states. Two of Trump's legal challenges to stop vote counting were thrown out by state courts in Michigan and Georgia on Thursday, and his remaining actions have failed to have any impact so far. In his first public appearance since election night, Trump repeated unsubstantiated claims about voter fraud and vowed to continue the legal actions. Investors are now looking at Biden beating Trump for the presidency, but for Republicans to keep control of the Senate, allowing them to block Democratic plans for hefty infrastructure spending and corporate tax hikes. In short, Congress will, in all likelihood, remain divided for another 2 years. This amounts to a major upset to hopes of substantial near-term fiscal support. Meanwhile, the coronavirus pandemic continues unchecked throughout most of Europe and the US. The European Central Bank was widely expected to announce more stimulus in December, even before the BOE's move. The major economic data released on Friday comes in from across the Atlantic, with October US non-farm payrolls data expected to show a further slowdown in the labour market recovery. In corporate news, Allianz is likely to be in the spotlight after the insurer giant posted a rise in net profit despite revenue falling in the third quarter. Swiss luxury conglomerate Richemont stock soared 10% after seeing some positive trends in its fiscal second quarter, thanks largely to a rebounding sales in China. Oil prices fell on Friday under pressure from signs of overproduction with OPEC and more aggressive discounting by Saudi Arabia in Asia. Crude futures traded 2.2% lower at $37.94 a barrel. Brent fell 2.1% to $40.07 per barrel. Gold futures fell 0.2% to $1,942.65 per ounce. On the FX front, GBP USD traded modestly flat at 131.33, looking to retest 2-week highs of 131.57 reached in earlier Asia. Markets are taking profits and the dollar bounces after the rally earlier this week. The US elections have yet to be called, with markets glued to 4 states. The Fed hinted at more QE ahead of October's non-farm payrolls. Negotiators from the EU and UK hit a snag earlier this week after several days of progress. Updates on the talks usually come out on Friday and could move the pair GBP USD, while the pound has already jumped after the Bank of England yesterday expanded its bond buying scheme by 150 billion sterling pounds, more than expected. The BOE also refrained from setting negative rates, yet Governor Andrew Bailey clarified that the option remains on the table. The EU Internal Market Commissioner Thierry Breton said on Friday, "We are extremely clear on the conditions and the access to our European market." Britain had more to lose than the EU in case talks broke down and resulted in a Brexit no-deal. These comments come after Michel Barnier, the EU's chief negotiator, warned of serious divergences between Brussels and the UK despite the 14 days of intense negotiations. In addition to the BOE news, the Finance Minister Rishi Sunak's job protection scheme extension offered a double booster shot to the GBP. The British currency could trade between the two major levels of 128.45 and 132. While upward momentum has improved, GBP has to move and stay above the major resistance at 132 before further sustained advance can be expected. At this stage, the prospect for this scenario is not high, but it could increase further as long as GBP does not move below 130 within these few days. Looking ahead, the next resistance above 132 is at 132.55, followed by 133. Euro-dollar is trading unchanged near 118.24 but is up over 1.5% this week. The dollar index was at 92.537. This is today's market news. Thanks for listening. We'll see you next time.